How much of a systemic risk is SoftBank? Is SoftBank the next Lehman Brothers? So a number of people I've been talking to in my financial contacts have been warning me about SoftBank. There's been a lot of articles for the last month or two coming out about SoftBank. Recently, they had really bad earnings. They had large losses, write-downs on a lot of their Silicon Valley and technology investments. Also, I follow Wolf Richter's podcast, Wolf Street. And in his articles, he lives in the Silicon Valley area, San Francisco metro area, Silicon Valley area. And so he covers that extensively. He covers the real estate market around there. And not only does SoftBank fund a lot of Silicon Valley unicorn startups, but SoftBank also has, through their exposure, massive exposure to WeWork, they also have a lot of commercial real estate investments in that area. I would say that they've overpaid. So if you're not familiar with SoftBank, they're a Japanese corporation. They were founded in the 1980s. According to their Wikipedia page, they started off as a computer sales company, computer parts, in the 1980s by Masayoshi-san, originally a computer parts store. And they kept building there, and they made one of the biggest breaks for the company was, I think in 2000, they put a $20 billion investment into Alibaba. And that $20 billion investment into Alibaba has turned into, they own, I think, approximately 26% of Alibaba now, and that's worth over $120 billion approximately. Now, there's discrepancies here about how many employees SoftBank has, but it's a large Japanese corporation. They have a lot of investments into robotics, a lot of legitimate technology investments. There's also, and I'll talk about this in a little bit, a lot of red flags, especially about the stories coming out. So they have a lot of failed investments in companies that are in Silicon Valley, but that are not really technology companies. They've been writing off losses. I believe they had a write-off in the last 12 to 18 months, $600 million on a dog walking app company that they made an investment in. They wrote off a lot of it. They wrote off recently a large chunk of Uber. They've been having problems with that. And the main new drag seems to be WeWork. But throughout their Silicon Valley portfolio, and they've been allocating Saudi capital. So they were supposed to invest, I think, $90 billion in two separate funds. They have their fund is called, let me look it up on their website real quick. Their fund is called like the, I don't have it here, right? Okay, I have the Wikipedia page open. They have the business units, here we go. So they have the SoftBank's corporate profile includes various other companies such as Japanese broadband company, SoftBank BB, data center company, gaming company, publishing company, Japanese financial service company, a Y Mobile subsidiary, SoftBank Capital, and their SoftBank Capital is their US-based venture company. So their US-based venture company, very, very risky. They've been taking a lot of Saudi money. Kyle Bass has said that SoftBank took $50 billion worth of Saudi money, and a lot of that went into WeWork. So if you look at if you look at SoftBank's balance sheet, what they've published. So first of all, SoftBank is not publicly traded here in the US. So they do not have to do SEC filings. So the stuff they release, I'm not as familiar with what Japanese regulators require, but SoftBank has a lot of debt on their balance sheet, and SoftBank also sells a lot of debt to Japanese investors looking for yield, and the Japanese bond rating agencies rate it as investment grade, whereas here in the US, the US bond rating agencies rate SoftBank's debt that they issue as junk. So it's BB plus and I think BA1 is what it said it in this article here. That was, let's see here, from November 6th. SoftBank's ever-growing mountain of debt, from Reuters. SoftBank has built a global conglomerate of telecoms and tech companies on an ever-growing mountain of junk debt that major rating agency, ever-growing mountain of, I added junk ahead of time, ever-growing mountain of debt that major rating agencies categorize as junk. SoftBank's decision on October 24th to spend more than $10 billion additional to bail out its office sharing portfolio company WeWork has raised concerns about the group's investment and governance standards. Jeffries downgraded SoftBank stock. SoftBank stock is currently at $38.40 on over the counter. Remember, they don't have to list here in the US. They're not listed in the US, so they don't have to report to the Securities and Exchange Commission. Their official market cap is $81.57 billion. Okay, back to the other article there. So WeWork has raised concerns about their additional investment in WeWork, and also giving the corrupt former co-founder and CEO of WeWork, Adam Neumann, a enormous bailout and payoff and golden parachute. They're paying him even more money to go away. Has raised concerns about the group's investment and governance standards. Jeffries, this investment bank Jeffries, downgraded SoftBank stock, saying the rescue is a case of, quote, throwing good money after bad. Company on Wednesday announced, this was almost 2 weeks ago, announced a 704 billion yen or 6.5 billion quarterly operating loss. Its first such loss in 14 years. And there's a lot more red flags coming. I'll talk about the financial statements that they have released on their website, because they don't have the SEC level of financial reporting standards. Masayoshi Son's company has 5.5 trillion yen or $51 billion in outstanding bonds. It's a lot of debt outstanding. So they've been, rather than selling equity, they've been issuing a lot of debt. It's been attractive to Japanese investors. They own a baseball team in Japan, and they use that for marketing because the baseball team is popular. They market it to Japanese male baseball fans to invest in SoftBank debt. I read that was mentioned in a number of the articles that I read about SoftBank. So, $51 billion worth of outstanding bonds, according to Refinitiv data. Add to that 4 trillion yen in bank loans. By comparison, Japan's entire corporate bond market is only 65.8 trillion yen. So SoftBank is a pretty large chunk of the total Japanese corporate bond market. So they have 5.5 trillion yen, and then another 4 trillion yen in bank loans. So add 9 trillion there, and then 69.5 trillion. And the total Japanese corporate bond market is 65.8 trillion. According to Japanese Securities Dealers Association, years 2022 and 2024 are when the biggest chunks of SoftBank debt mature, 935 billion yen and 1 trillion yen respectively. So the company's weighted average cost of debt, 3.7%, seventh highest among all companies on the Nikkei index. One way that the company has helped keep financing costs down, and I talked about this a second ago, is by appealing directly to retail investors in Japan, to fans of the baseball team they own, the I'm going to screw this up. Fukuoka Hawks baseball team. SoftBank has 2.1 trillion yen in outstanding Hawks bonds, which have been marked toward retail investors and baseball fans. Interest rates on the debt range from 1.26% to 1.64%. If you're familiar with the Japanese government bond market, that interest rate is a lot higher than what Japanese government bonds yield, compared to a simple average of 3.9% on SoftBank's other outstanding bonds, rated junk. So Moody's Investor Service and S&P Global rate SoftBank's debt at BA1 and BB+, respectively, both one step below investment grade for most institutional investors or junk ratings. On the other hand, Japan-based rating agency JCR for bonds rates SoftBank as A-, which is investment grade on its scale. So here's a warning sign about SoftBank. This occurred at the end of October and early November. Credit default swaps protecting SoftBank's debt for 5 years were quoted at 226 basis points, the second highest among all Japanese corporations, behind shipper Kawasaki Kisen Kaisha Limited. So shipping companies are having a lot of problems. The investments that SoftBank has are not supposed to be as cyclical as shipping companies, but SoftBank, I think the market is starting to realize, especially the bond market, that SoftBank has a lot of bad investments. And there's going to be a lot of write-downs, and they're using way too much debt to finance very risky, very speculative Silicon Valley unicorn overpaying valuations. And there's been a lot of talk. There's articles I've seen, and also talking with Silicon Valley people, that SoftBank plays a lot of games with their funding of these companies, these Silicon Valley companies. So they'll do smaller capital raises at higher valuations along the way as they're trying to move a company to IPO to dump their position of shares. And they're trying to raise the total valuation of all the other shares that they funded. So it's a common trick, common fraud for Silicon Valley investors to do this. Not every Silicon Valley investor does this, but it's unfortunately all too common. And apparently, from what I've heard, it's pretty common for SoftBank. As a lot of these companies that SoftBank has invested in, they will do small capital raises and then keep trying to do them at a higher valuation and then claim that the rest of the portfolio is at higher and higher valuations of their investments. Even though in reality they couldn't sell a lot of those shares at the higher valuation, they only did a small amount of equity raises at a higher valuation. But they're claiming that their entire investment is worth more. And this is why you have these investment banks falling all over each other. Prior to all the mess that started with WeWork, you had all these Wall Street investment banks just slobbering, like tripping each other up. You know, one of those cartoon images of like all these businessmen or people fighting over each other to get to something, climbing on top of one another. Because the stories of the WeWork IPO, when initially WeWork was debating filing IPO, was initially one of the investment banks was like, oh, we'll do a 50 billion IPO. And then another investment bank here on I'm not on Wall Street, but here in the United States on Wall Street was, oh, we'll do 60, we can guarantee 60 billion IPO. And then you had like Morgan Stanley saying, I think 70 billion. And then you had Goldman Sachs saying, no, we can get you 100 billion. And the reality is that the company WeWork, if you're not familiar with WeWork, they overpay, and I've heard a lot of stories about them overpaying from my contacts for corporate real estate, for commercial real estate here in the major cities, whether it's DC metro area, London, New York City, Silicon Valley, elsewhere. And then what they try to do at WeWork is they try to sell smaller amounts of office space at a much higher square footage cost per square foot to rent. For entrepreneurs, for people who are small business, very small business, normally entrepreneurs though. And so the entrepreneur is getting a very tiny amount of space to work, but they're paying a much higher cost. And even despite that, in spite of overcharging entrepreneurs for small amounts of space to work at WeWork still could not make money. They were still losing massive amounts of money, larger and larger money, the more that they grew. The company was inefficient. There's stories out there of the co-founder and CEO, Adam Newman, him and his girlfriend or wife, I can't remember, were trying to steal. They were siphoning off tons and tons of money all for themselves. Okay, so back to the article. So Alibaba cushion, this article talks from Reuters, talks about an Alibaba cushion. What SoftBank has in its favor is very large stakes in listed companies that can be sold off if it needs to raise money in a hurry. The biggest asset by far is a 26% stake now in Alibaba, worth about $120 billion. The size and liquidity of SoftBank's investment portfolio, which stood at about $240 billion as of June, means that, but there's going to be additional write-downs. So there's been write-downs on this $240 billion as of June. There's write-downs, quite a lot of them. Plus, they're bailing out WeWork, which means that there's a lot of liabilities attached to that. They only have, in spite of all the assets they have, they only have about $80 billion market cap. So they should almost definitely sell that Alibaba stake, because there's a lot of red flags in Alibaba's accounting. They should get what they can for Alibaba now. Anyways, considering how Xi is now in power and the souring relationship between Chinese and Japanese on many different levels, that has only gotten worse, really. Remember, in 2011, Japanese companies had their rare earth export licenses, taking rare earths out of China and importing them into Japan. They had those revoked, and it caused a big, big panic. So I'm surprised that SoftBank still has an Alibaba stake, considering that Xi now is very nationalistic, pro-China, and Japan and China's history post-World War II. Surprised that SoftBank hasn't sold more. But there's a lot of red flags at Alibaba accounting. You'd think that SoftBank wouldn't want any part of it. Okay, so talks about that SoftBank still has a cushion. I'm going to talk about the financials that they do have publicly listed in English and Japanese yen on the SoftBank website, and how, in my opinion, there are a lot of red flags in their financials. So first of all, they listed the adjusted free cash flow, which adjusted free cash flow is a red flag in and of itself. But the adjusted free cash flow for full year 2017 and 2018, it dropped by almost half in 1 year. So their free cash flow dropped a lot. So they claim to have still high values in assets. Meanwhile, there are red flags with the free cash flow at the business. They're claiming that they're making all this investment capex into companies, but more and more of their companies are having failures and write-downs. The other thing about their financial metrics, they don't have super high operating margins. Their operating margins are, I think their margins slightly improved full year 2018 to operating margins are 19.2%. That's not super high because then their net income, their net profit margins are not going to end up being that high. I don't see their net profit margins. They don't have them listed on their website right now, but they talk about their debt to equity ratios, and let's just say their debt to equity ratios are not pretty at all. So their net debt to EBITDA ratios are at 2.4 times net debt to EBITDA. That's pretty high. They were 2.7, so those have come down, but their debt to equity ratios were sky high in 2017. So they had 3.5 times as much net debt as they did equity, super high in 2017. And 2018, they've come down slightly, quite a bit, to 2.3 times net debt to equity. So that's not that good either. It has come down, but it's still not that good. So this company has a lot of red flags. They've made investments. They've taken Saudi money. According to Kyle Bass, they have $50 billion in Saudi money that they've allocated. They were supposed to allocate $90 billion worth of Saudi money and other foreigners' money into Silicon Valley startups, but I have a feeling they only allocated about $45 billion of that in the last couple of years, that they're not going to get the rest of the money, considering how bad things are looking for them. They just had a really bad quarterly loss, and they announced write-downs of a lot of investments in their portfolio, plus the bailout of WeWork, where they're taking on an additional $10 billion and all the bad PR that comes from giving, looks like the criminal. The former CEO of WeWork looks like a criminal to me. I mean, look, I'm all for capitalism and free markets, but if someone is a CEO and he's stealing from shareholders and he's, patting himself with enormous amounts of profits and giving his girlfriend or wife, jobs where she's earning 7 figures a year in options and not doing any work, that's fraud. People need to go to prison. So Wolf Richter covers a lot of this, but I think in terms of potential impact for Lehman Brothers, now SoftBank is a little bit larger than Lehman Brothers, because Lehman Brothers had around a $60 billion market cap at their peak. Lehman Brothers was a larger, in my opinion, systemic risk, because Lehman Brothers was counterparty to so many other large Wall Street investment banks, and Lehman Brothers was involved in, derivatives and all that. It doesn't appear that SoftBank is involved in anywhere near the derivatives that Lehman Brothers is. So in terms of size, yes, there's a somewhat applicable comparison to Lehman Brothers for SoftBank, but not in terms of the derivatives and counterparty risk and all that. However, I would say that the largest risks for SoftBank are to the Silicon Valley area directly and the real estate markets in that area. So the real estate market, if SoftBank all of a sudden decides they can't allocate billions of dollars more, or they cut back, or they close down startups, they stop funding them, that will really, really hurt Silicon Valley disproportionately. And in my opinion, it will really, really hurt disproportionately real estate in Silicon Valley. And this is very similar to what Wolf Richter at wolfstreet.com, he's been doing. I highly recommend his podcast. He does a lot of updates on this just in the last couple months. And there's a lot of red flags with Silicon Valley startups. So almost exactly a year ago, this guy named Chamath Palihapitiya, CEO of Palo Alto-based Social Capital. He was formerly an early Facebook executive responsible for increasing its user base, but left in 2011 to found his own venture. He wrote an extensive report. He is a Silicon Valley investor, and he was being honest. This was about a year ago, from November 7th, 2018. Wolf Richter also covered this. And he was talking about how Silicon Valley startups are basically Ponzi schemes. So he wrote last year, I'll put links to this if you want to take a look. He wrote a 15-page annual letter last year talking about how startup and venture capital ecosystems A lot of venture capital investors are bag holders, not what you think. And a lot of these things are, he used the analogy, time to wait patiently as the air slowly let out of this bizarre Ponzi scheme balloon created by the venture capital industry. So big tech will get bigger and will leave less room for obvious companies, in his opinion, doing obvious things. The demands of, and we see a lot of this because, all these companies, Google, Amazon, Facebook, Twitter, all these guys are making investments into other businesses. Facebook is investing in Oculus Rift, virtual reality, and a lot of other businesses. And Google is investing in artificial intelligence. They're working with the Chinese government, which I don't think is violating. I think is violating national security. Peter Thiel has done interviews earlier this year in Tucker Carlson talking about how this is a national security risk. Why should Google be working with the Chinese government on developing artificial intelligence? Google is obviously doing a lot of investing in robotics. That's going to mean a lot less jobs for human beings. Good for holders of capital investing in robotics. Bad for human beings, as everything gets automated or more robots. A lot of human beings are going to lose their job. So if you want to read his take, I'll put articles to that. But there's a massive amount of red flags at SoftBank. But I don't think SoftBank, I know there's people out there who believe that SoftBank is as systemically important as Lehman Brothers. I don't see it. I see SoftBank as very, very important to the local economy in Silicon Valley, for real estate and for the startup investments, but I don't see nearly the global exposure. I mean, Japanese investors could lose a lot of money if SoftBank has more problems, but I don't see the systemic risks that Lehman Brothers had. That when the New York Federal Reserve, the other banks, and the Fed decided not to bail out Lehman Brothers, and they used it as a sacrificial lamb, and it almost took the whole system down. So I have a number of other articles about SoftBank here if you want to read more and learn more about it. It is not, again, publicly traded here in the US, so they are not compliant with Securities and Exchange requirements to list all their financials. Not sure what Japanese regulation is, but from what I've seen from them releasing their balance sheet is over-leveraged. Although it looks like in the last 18 to 24 months, they have focused on somewhat lowering the leverage ratios on their balance sheet. But it also looks like that SoftBank is going to have, in my opinion, a lot more write-downs on their Silicon Valley investments that were highly speculative. Plus, they've used debt to finance these very, very highly from Japanese investors who are desperate for yield because the Japanese government and central bank have been manipulating interest rates lower for longer than anyone else with financial repression. White Wolf says Silicon Valley is finished. I don't know if Silicon Valley is finished, but a lot of the waste, fraud, corruption, and abuse will be wrung out of the system. If SoftBank has problems, SoftBank was contributing a large amount of capital, so was the Chinese government. The Chinese government and private Chinese companies have been contributing a lot to Silicon Valley for a while now. And now with the trade war and the economic Cold War escalating, there's a lot less Chinese money going into Silicon Valley, too. Finance and Economics says he doesn't think SoftBank is a system risk. I agree. I think it's a risk mostly for Silicon Valley startups, and also for the real estate in the San Francisco metro area. And I hear from Wolf Richter, he interviews a lot of the commercial real estate agents and also residential real estate agents in the San Francisco metro area, that the real estate market is getting very, very shaky. That the majority of demand now is no longer speculative for real estate in that area. It's only for people who actually need houses. And that has a lot of real estate agents in that area worried. Yeah, it could be Deutsche Bank for repo madness. The other theory from Christopher Whalen, he has a research report out on this. He wrote some previews of it in 2 free blog articles. He's a very well-respected hedge fund and institutional level bank analyst. He thinks it could be Citibank for repo madness, because Citibank has the most derivatives of any large U.S. bank, and that might mean that they're a counterparty with Deutsche Bank on a lot of derivatives. Yeah, Dan, I mentioned that SoftBank owns a large chunk of Alibaba. But I'm surprised, given how nationalistic she is, that their SoftBank, a Japanese corporation, is allowed to own so much of Alibaba. I could see she trying to go after that, trying to confiscate it at some point. I mean, tensions, there's always some tensions between Japan and China given the history that those two countries have. And occasionally the tensions escalate for a while. There's really, really bad history there if you're not familiar, especially during World War II. What is my take on Russia? I think Russia has the least amount of debt of any country. So they don't have a diversified economy yet. Russia needs more diversification in their economy. They have too much exposure to oil and gas and metals. They need to have more private property, better rule of law for foreign investors. I still don't trust investing in Russia in a lot of aspects. I know Russians who speak Russian fluently, who have no problems, they claim, doing business there. But as a foreigner who does not speak Russian, even though my ancestors are from Russia and Ukraine, but I don't speak the language, I'm still worried about being ripped off there. So Russia financially does not have a lot of debt. They don't have a lot of U.S. treasuries. They've been stockpiling gold. The crypto ruble, I think, is a scam. I don't like the crypto ruble. It sounds very similar to what China wants to do with the crypto yuan. Although I think they're going to offer people a financial incentive to mine the crypto ruble. This has been talked about in theory for a couple of years now. So I think Russia is doing a pretty good job with not too much debt in their federal government finances. The problem is they need to respect foreign investment and private property rule law, and they have to have their economy diversified more. I don't think their economy is nearly diversified to the levels it should be. Finance and Economics says he hasn't done any research on SoftBank. Well, I have a handful of articles here if you want to start doing research on SoftBank. Their credit default swaps had a big spike at the end of October. There was a 17%, more than 17% increase in their credit default swaps, which means that the chief financial officer at SoftBank did not do a good job buying their credit default swaps ahead of time. Because from what I hear, a lot of these companies that have leveraged balance sheets, these large corporations here in the US, they figured out in 2008 with the credit default spiking that was a signal. And so from what I've heard, a lot of these large corporations are buying their own credit default swaps. There's no law against it, not buying them. So the credit default spike in SoftBank, that went up a lot, over 17% in a very short amount of time. Went up 17%, I think, in like a week. Yeah, I think RR says, so Citibank and Deutsche Bank could both be causing repo menace. Yeah, I think it's probably more than one bank. The amount of repo madness that we have is averaging, at least right now, $190 billion per day in the US, and that's before these 28-day term repos and the 42-day term repos kick in. And my educated guess, no one knows for sure. I mean, I've asked a lot of different people who have a lot of good financial contacts, and no one knows for sure. But my educated guess is that it's more than one bank. But it might be one bank that's starting to cause big problems at other banks. So it could be like Deutsche Bank is having problems, and then a lot of Deutsche Bank's counterparties then are having problems. It could be like that. But if you add in the repo that China's doing on a daily basis, starting in January of this year, and then China just did 2 emergency liquidity injections in only a week, tens of billions per day in the liquidity injections. So China I'll do another separate show on this and read the articles. Yeah, 42-day term repos are real bad. 40-day term repos, that means those things are not going to be rolling off the balance sheet, in my opinion. Those are going to be stuck on the balance sheet permanently, probably until not QE increases from 60 billion per month to 100 billion or more per month. That would be my opinion. I don't know exactly when on the timing on that. So if you're not familiar with Alibaba, yeah, Yahoo owns a large stake too, but I think Yahoo was debating selling it, or was that another one of their stakes that they were debating selling? There's a lot of red flags in Alibaba accounting. I speak to hedge fund managers that have degrees in accounting that know this stuff very, very well, and they go through a great detail. Meanwhile, you see articles on Seeking Alpha that only talk about, first of all, I don't think Alibaba even has to be compliant with SEC rules. So Alibaba is listed here in the US, but they get a waiver. They don't have to be, their accounting doesn't have to be compliant with SEC. Kyle Bass has talked about this. Chinese companies, especially Alibaba, do not have to be compliant. They get a waiver from the SEC. They do not have to be compliant with strict US accounting laws. And the US allows a lot of aggressive, creative accounting, but if you're not even compliant with that, I think that's a red flag in and of itself. Yeah, and if you're the other story about Alibaba is that recently Jack Ma had to sign over control, a large control of it, to 5 unnamed people with the same address. And now the Chinese government under Xi is assigning high-level government bureaucrats from the Chinese Communist Party to all of China's largest corporations. So they all have to be high-level management then, working in China's corporations. Finance and Economics says in a real free market, these firms would be facing some market discipline for their bad bets and investments. I totally agree. And it looks like SoftBank is playing arbitrage with how their bond ratings, they issue all these bonds to desperate for yield, desperate for income Japanese investors. And those bonds that they issue in Japan are rated investment grade, whereas U.S. credit rating agencies rate them. And you all know about my criticisms of the ratings agencies here, and the ratings agencies here are rating SoftBank debt as junk. So it looks like SoftBank is taking advantage of how Japanese credit ratings agencies are, what's the right phrase here, being way too lenient with the ratings. Yeah, I might do a commodities discussion. I'm not sure what type of commodities you want. Someone asked about platinum and palladium. Not an expert on that. Maybe I should have my buddy David Jansen back on. He was the one who made the palladium call for years. He called that ahead of time. I had him on the show years ago about the palladium call. Deutsche Bank is a very big systemic risk, Rob, one of the biggest ones. That's why the European Central Bank got many trillions of dollars in secret bailout money, currency swaps, interest-free loans from the Federal Reserve during the 2008 financial crisis, and that's why the Federal Reserve and their lawyers were fighting to not have that information revealed in a one-time partial independent audit. Deutsche Bank almost collapsed then. But for tens of trillions of dollars that were given out, interest-free loans, a lot of that money went to the European Central Bank and then to Deutsche Bank and other European banks. So they've been on life support for a long time. I've covered this, there's been a ton of manipulation in the Deutsche Bank stock chart preventing it from going below 5. It will probably eventually go below 5 soon, but there's been a ton of manipulation delaying the inevitability. Terrence, if you check Alibaba, there's a lot of people selling goods on Alibaba for cheaper prices than the shipping cost, and the Chinese government subsidizes a lot of the shipping cost, all of it, out of the country. So the Chinese government is subsidizing Alibaba. A lot of those shippers on Alibaba who are selling cheap goods, they don't even some of the goods that they sell are less than the shipping costs. Derivatives. Deutsche Bank has $49 trillion in over-the-counter derivatives. Deutsche Bank does not have anywhere near that money to cover all those derivative bets going bad. If a couple of those derivative bets go bad, they have to go to either the German government, and Germany's GDP is nowhere near the size to cover that, or most likely the European Central Bank to cover some of it. And the European Central Bank will, in my opinion, have to announce that they will guarantee some of those derivatives, even if Deutsche Bank stock goes to zero, and then the Federal Reserve may even have to step in at some point. Jim Rickards talks about in his new book, Aftermath, and a lot of people don't like Rickards, but you can find juicy details of information buried in some of these books, even if you don't like the author or like the book. Like in Ray Dalio's book, Principles, a lot of people hated that book and said it was boring. I thought there was pretty good business strategy in there for how he built this business. There's also a couple really juicy tidbits in there about how Ray Dalio got a secret private one-on-one meeting with Mario Draghi, encouraged Draghi at the ECB to do quantitative easing years ago, start that. And then also Dalio's meetings, getting access to China and Chinese investments many years before other people. And his connections to Chinese billionaires and the people in the Chinese government. But anyways, Jim Rickards talks about, in the new book, Aftermath, one of the most interesting things in there is he had a conversation with Timothy Geithner. And I don't like Timothy Geithner, but he was also head of the New York Federal Reserve, and he was either Assistant Treasury Secretary, but he was under Henry Paulson, so he was Assistant Treasury Secretary, but he was also head of the New York Fed. He was very powerful, very well-connected globalist, and Geithner said that the central banks and governments will be guaranteeing things like derivatives and pensions and failing banks so to protect depositors. Geithner says that instead of necessarily announcing massive QE or something like that, that they will be doing a lot more guarantee announcements. Because the average person, who doesn't pay any attention to this, they only care if they have access to their bank account. It's announcing a guarantee. The average person who is, Doug Casey calls them boobus Americanus. You know, the average person who watches reality TV or sports or plays video games all the time or spends all their time posting like Instagram booty shots or whatever. You know, they only care if they have access to their bank account money. They don't care about any of the money that gets printed or any of that. The average person doesn't care about any of that stuff. They only care like, oh, I can't have access to my bank account. There was a Bank of America story, at the end of October, someone sent me this, that there was a glitch for Bank of America for hours and hours. People couldn't access through their mobile app their Bank of America bank account. And Bank of America issued like a really weird statement. And it, to me, sounded like they got hacked and they had to go to their backups. That there was a legitimate like cybersecurity issue there. Maybe a government had hacked them and test their systems. I've actually been, I talked about this years ago, like 3 or 4 years ago, when the cybersecurity ETF hack, HACK, when that was like $16, $17, $18 a share, it was $38 a share. So it's gone up a lot in the last couple years. I don't know if it's a good value right now, but I thought it was a good value back then. Cybersecurity is a major issue. That's going to be the front lines of all wars now, is cybersecurity. Financial wars and cybersecurity wars. Eric says, with what's been going on, gold and silver should be 50% higher. Yes. And in every other currency but the dollar, gold and silver are at or near all-time highs. It's only the US dollar. Gold and silver prices in US dollar where the paper games are played like crazy, in my opinion. The manipulation games in other currencies are nowhere near as bad. Okay, Erickson, a super chat. Thank you. All the bank liquidity issues, failures, Fed balance sheet increases are all public information. Why is it being overlooked by markets and press? Because they're promoting higher stock prices. That's why. Their job is to keep the majority of sheeple, people, regular American people who don't care unless there's a problem accessing their bank account or the ATM, who only care about them. They don't care about any of these big picture, long-term, big picture problems, long-term societal problems, systemic problems. The average person doesn't care anything about this. Okay, the average young adult, most of them only care about like video games, Instagram, stuff like that. So the mainstream financial media and the press, they're promoting that the stock market is higher, even though a lot of them hate Donald Trump. They still can't talk the business press cannot talk too much shit on him because the stock market's up. Which is why a lot of Democrats want the stock market to crash. So the press needs to keep the investors in the stock market. Don't pull out your money. They don't want anyone pulling out their money. They're grasping at any fundamental argument for why stocks could be justified to be at these levels and why stocks on a fundamental argument are going to go higher. Not because like I talked about yesterday, not because the Fed increased their balance sheet a lot since August, the end of August, where in 2.5 months, the Fed's balance sheet's up almost $300 billion. So of course, all that extra liquidity is going to end up in stocks and other asset prices. Thanks for the super chat, Jesse. What commodities do you want me to talk about? Is there any specific commodities you would like me to analyze? I've made my thoughts on the oil market very clear. Oil may have a rally, but in my opinion, the producing oil companies are in a lot of trouble. You can email me questions if you have questions. And then maybe I'll prepare those for a show. I'll think about it. I haven't looked at copper recently, but it was struggling. And from what I've heard from the precious metals royalty and streaming companies announcing recently that a lot of these producing copper miners want to sell gold and silver byproduct metal streams. Okay, so I have a number of different articles, a handful of them about SoftBank, including one from the New York Post talking about the bailout of the founder, $10 billion takeover of WeWork, doubling down on an ill-fated investment. This was from October 23rd, giving a nearly $1.7 billion payoff to the U.S. office-based sharing startup's co-founder Adam Neumann to give up control of SoftBank. Give up control of WeWork. Wow, that's criminal. That's fraudulent. That's horrible. And SoftBank has committed more than $13 billion in equity to WeWork, and WeWork is now valued at only $8 billion. Finance and Economics says the stock market will crash. It's just a matter of time. Maybe. It depends how much all these central banks are going to put in. So if the Fed is going to go from $60 billion per month and not QE up to $100 billion, $120 billion per month, $150 billion per month and not QE, then maybe the stock market does a crack-up boom, Some people are calling it a melt up before it crashes again. But then your gains are only going to be nominal because the real inflation rate in the economy is going to pick up a lot. There's going to be a ton of stagflate and tax and lie. Consolidate WeWork? No, they're bailing out. WeWork's a bad investment. They're throwing good money after bad. I covered this at the beginning. Go back and listen to the show after it's over, Renan. No one thinks that SoftBank should be throwing any more money at WeWork, and yet they are. And them taking on all these additional liabilities with how much debt they already have is putting SoftBank in trouble. Yeah, I mean, a lot of the capital, the liquidity that the People's Bank of China, the European Central Bank, the Federal Reserve, Bank of Japan created in the last decade, a lot of that capital has gone into stocks, bonds, real estate. Especially stocks in the US, real estate all over the globe. There's specific cities that it went into the most, like Hong Kong, Toronto, Vancouver, London, Sydney, Australia, Melbourne, all in major cities here in the US. Anyone else reporting on what? On SoftBank? Which are you talking about? SoftBank story? So I think SoftBank, in my opinion, SoftBank has a lot more bad investments that are going to be written down. They just started the write-downs. This is their first loss, I think, quarterly loss in 14 years. And that's because they rode the tech bubble, the unicorn tech bubble up. But in my opinion, a lot of these, I agree with the analysis from that guy a year ago who wrote the research report that a lot of these Silicon Valley unicorns are frauds. They're revenue growth only, and it's a really, really bad idea to make speculative investments with debt. Really bad idea. And that's what SoftBank has done. They've made really, really risky speculative bets that they've labeled as investments with debt. Thanks for the super chat, Kelly. I already practice what I preach, so I don't really need to change my life that much. I think most people have way too much debt. People who are smart using debt, they should be using rental property, in my opinion. Rental property income, if you're going to use debt. People are using debt for the wrong reasons. Americans are really bad at using debt. Build savings, but don't save, in my opinion, build savings, but don't save a lot in fiat currency. Save in gold and silver. There's a bunch of different ways to save. Most people try to, I was going to do a personal finance show on Ryan Lochte, the multiple gold medal winning Olympic swimmer. So maybe I should save this super chat for that show. Because Ryan Lochte had a very interesting story about his life. He was making millions of dollars, and then he made a public relations nightmare screw up at the 2016 Summer Rio Olympics, and then he lost almost everything that he was making. His reputation got screwed up, and he was living paycheck to paycheck, and it's a good personal finance case study. And I think it applies to everyone. So even though he was making millions of dollars a year at one point, he lost everything very, very quickly. His wife didn't leave him. He was lucky with that. He didn't have to go through a divorce. So he was lucky he picked the right woman. She didn't leave him. But in general, most people need to grow their revenues. Don't go too much into debt unless you're using debt to acquire things like rental properties. Avoid debt. Pay down debt. Avoid debt. Unless you're using debt strategically for more quality assets and cash flow. Nothing speculative. Build savings. Don't save in fiat currencies for the long term. If you're going to hold cash for a stock market crash or for properties in an area to go, let's say there's a Silicon Valley, let's say Silicon Valley stocks crash, right? The property markets in Silicon Valley could crash with them. And then that would be hypothetically an opportunity to go in there and buy good quality real estate for cheap. And in general, I think everyone needs to be more entrepreneurial, because what's coming with the politician, the IMF is writing white papers all this year. David McAlvany Weekly Commentary covers this. He actually read the IMF white papers. IMF wants negative interest rates applied to all these countries. So not only negative interest rate policy, they also want taxes increased across the board. And in a scenario like that, you're going to have to be entrepreneurial to replace lost income, to maintain or improve your standard of living. You're going to have to be entrepreneurial. You're going to have to grow your revenues. So you can't pinch pennies. Look, anyway, if you're living with someone and you pinch pennies, they're going to start to hate you. Even if you tell them, even if they say that they're on board, after a while, if all you do is just live a very frugal lifestyle, they're probably not going to like you very much. It's much easier for people to come up with a plan on growth, growing revenues, being entrepreneurial, get friends or family, someone that has different skills or that could complement yours into growing revenue. A side business, a side hustle. Well, if you do both. So if you can cut expenses and grow revenues, you're going to be in very, very good shape. If you can cut it, so if all you do is cut expenses, anyone you're living with is going to hate you. Like, belt tightening only works if you're doing it yourself. You're going to be upset, but you're doing it by yourself, and the other people around you can't leave you or whatever. Well, if you're doing it by yourself, no one's going to leave you for saying that you're a cheap bastard. Leave you or divorce you or whatever. Yeah, I think what most people leave out, because they say get out of debt and cut expenses, but it's grow revenue. You're going to have to be entrepreneurial, because there's more stagflate and tax and lie coming. I was going to talk about this with my personal finance case study. Maybe I'll do that tomorrow. We'll see. I've got another request also to talk about the dollar, my thoughts on the US dollar. What's going on with the dollar is very, very complicated. Most people in the gold community don't understand. It's sad. Either they don't understand or they're intentionally ignoring reality and just promoting their agenda. Hello, Haster. Does your wife or girlfriend put up with you being cheap? Because I've just heard too many stories. Eventually, they get pissed off with it. If your standard of living drastically declines, a lot of times that ends in divorce or breakups. It's very common. The husband or boyfriend loses his job. He starts cutting expenses or downsizing. The wife or girlfriend does not want to stick around much, very long. William, I was working on getting some interviews for some entrepreneurs. I thought I had one scheduled. It's gone rescheduled a couple times. Okay, so my voice is starting to go. I want to thank my almost 200 Patreon account contributors, my almost a dozen monthly PayPal contributors, and the people who tip me once in a while. You are allowing me to have a lot less stress in my life and focus on quality content like this and growing my business. Hopefully one day I will be able to raise capital for my educational technology company. I want to have a platform, a virtual classroom learning platform, where people can listen to lectures from many different experts like this. So we got, let's see here, 1, 2, 3, 4 super chats. Thank you, RR, Kelly, Jesse, and Eric. So Kelly, if you can save more, if you can't save with the revenue, the income that you have now, maybe you develop a side hustle, Be more entrepreneurial in your life. Because if I'm right, and I think I'm going to be, because the politicians are to scream, the politicians and central bankers are going to scream about deflation. And the reality is our standard of living is going to be a lot worse. They're going to stagflate and tax and lie. They're going to layer new taxes on across the board. They're going to increase existing taxes. They're going to increase the amount of inflation there is, and they're going to lie about it. We already have stagflation now, but it can get a lot worse. And that wouldn't be hyperinflation. It can be a lot worse stagflation. There's a lot of people in China right now worried about stagflation because of the rising costs of pork. I'm hearing tons of stories about it. Pork prices are up more than double in the last year. They're actually over triple. In just the last year, pork prices have more than tripled according to China's own data. So if your income has not grown, that means your standard of living is going to be declining. Oh yeah, Phil, I appreciate it. Yeah, hit the like button. That really helps me out. Yeah, the Chinese don't want soybeans because they use the soybeans for the pork. I mean, they're buying agriculture from the Brazilians. That's why the JBA Meats has done well since May. That's the Brazilian meat producer I was talking about many, many months ago. That stock went up over threefold since May. I talked about it on a podcast in May or June. It's been up threefold. The stock is correcting a little bit. Remember, it was just my opinion. It was a traded idea. It's been up over threefold since May. Go and look at the chart. Price increase in our food. I think portion size, what the food companies are doing, they're hiding packaging, they're substituting ingredients, and they're not drastically raising the price. What is happening is the portion size is being reduced. So the price may only go up like 10 cents or 20 cents on some of the food items, but then the portion size is being reduced 20 to 40%. The average person doesn't notice any of this. The cost per unit is where the cost of the goods are really going up. Okay, my voice is starting to go. It's late here. It's 1:25. I don't have much of a social life right now, so I'm just going to go lift weights before bed and relax. Everyone have a nice rest of your weekend.